Welcome to the Titans of Industry interview. I'm here with former Wall Street analyst, now a Bitcoin researcher and a content creator for the entire crypto space. And since 2013, he's been advocating and promoting the freedom and the economics of the crypto space. This is a very important interview, and I'm very glad to have with us Tone Vays. Tone, how are you?
Oh, I'm good. Thank you for having me on.
Well, thanks for being here. Look, I loved your content and reading it, and I want to get your thoughts, first of all, because they're very provocative and counter to what many people think. You perceive stocks right now as a whole as cheap, correct?
Yeah.
Can you elaborate on that? That goes against many of Wall Street top people and many in the alternative media that see this as the end of an 8 or 9 year bull market in stocks that started in 2008. They see the P/E ratios as generationally high. They've only been higher at the dot-com bubble, at the Great Depression of the 30s and in the 1890s. And they talk about the lack of fundamentals, declining profit margins, and the exceeding debt levels, and just overall a lack of reason for stocks to be this high, except for negative interest rates. You see it differently, so can you please take us through your analysis?
Sure. There's several reasons why I see it differently. Now, of course, we have been on this unprecedented 8-9 year bull run since the last big fall in 2008. And like many people during that fall, I thought that, maybe we should have gone a little lower. It didn't feel like we bounced. But I also had those feelings. I was always expecting a market crash. I started becoming a gold bug. I'm like, oh, you got to buy gold. It's going to go bad. Now that I've been in the crypto space for a few years, I've left Wall Street. Now I'm a trader as well. And I look at it a little bit differently now. I started doing more research on the stock market going back to the Federal Reserve. And what I've noticed was, we had a couple of crashes 8 years apart, basically. And the stock market as a whole over the last 20 years has greatly underperformed its historical 100-year average. So
What are the numbers, Tone?
Well, over the last, since the Federal Reserve, the stock market has generally returned about 7 to 8% on average. And if you factor in dividends, reinvestment, it's more. It's closer to 9-10%.
You're talking about the S&P 500?
Yeah, or the Dow Jones. They're almost identical. S&P, Dow, it's the same thing pretty much.
The historical all-in with dividends, obviously minus all commissions, etc., is
it's about 8%.
About 8%.
Yeah, 8-9%. Yeah.
Amazing for a 104-year rate of growth. How long does it take to double your money with a 8% return?
It takes about 7 years.
So the average investor buying the S&P 500 in the past 104 years and doing nothing but buying the index would have doubled his money every few years.
Oh, yeah. He would have done amazingly well. I mean, people did the analysis. If Donald Trump put his inheritance in the S&P 500 when he got it, instead of becoming a real estate tycoon, he could have done nothing for 40 years, and he'd have 4 times more money today.
That's very interesting. What's the latest 20 years worth of return?
We've been over the last 15 years or so, the S&P has returned 3 to 4% per year. And most of that has only been in the last few years. I did a presentation in Mexico. It was an Anarchapulco. It was the big anarchist conference by Jeff Berwick. I stood on stage in February of last year, 2015, and I said gold is a bad investment and stocks will be the best. I said Bitcoin would be the best investment, but I said stocks would be a good investment. People kind of laughed at me, and then I was back there 2 months ago, exactly 1 year later. Gold made I was wrong. Gold didn't fall. Gold made $10 an ounce over that year, but the S&P 500 returned 25% in 1 year. it's catching up. S&P is trying to catch up to historical norms.
Sure. Now, Tone, just to clarify, the gold, you're talking gold bullion, the gold physical metal, correct?
Well, I guess, I'm talking physical and paper. 95% of all gold price is determined by paper.
Sure.
So it's really hard to separate the two. I've had these debates with like Andy Hoffman and others. If you eliminate paper trading, there may be no price for gold. It might be like diamonds. You have like two companies deciding what it's worth.
Interesting. So, but just to clarify, this is very, very important. The role of stocks is to produce profits. The role of companies is to produce profits. Is when you own stocks, you participate in the growth, in the dynamics of the market, and obviously you participate in that compounding effect. Gold is not an asset that produces cash flow or profits, etc. Its role is to be an insurance or a safe haven or an asset to get outside of the system. And so obviously,
absolutely, I agree with that 100%.
It's very important to understand that the role of gold bullion is not the same as the role as investing in stock, and therefore obviously the returns are much different.
Well, right. What
comparison should be made with other currencies as opposed to gold, and obviously stocks as opposed to other cash producing assets. But obviously there are many in the gold scene that are trying to invest in gold as if it should act as stocks, and therefore I do understand exactly what happened to you when you encountered a crowd at Acapulco where people are
right. I mean, what happens? Gold. You're right. Gold is a good hedge. It's a good risk. If something happens, it's good to have gold. But what happens is people end up in this position where they load up on gold, and now they want stocks to crash. They want the economy to crash. They want to get rich on their gold. It's the equivalent of you taking out 10 different insurance policies on your house, and now you're mad how come the Great Flood isn't coming.
That's correct. It's a great analogy.
And you end up in this position where gold crashed with the market in 2008, because when the stock market crashes, that means companies go out of business. Big companies go out of business. People lose their jobs. And the last thing people care about is like they don't have money. Who's going to buy your gold? Like a lot of bad things happen when stocks crash, and gold doesn't necessarily benefit. And if we talk about inflation or hyperinflation, that's fine too, because historically, the Federal Reserve has been printing all this money for 100 years, but that also means that the value of the stocks adjusts for inflation, and the value of the stocks adjusts for improvements in technology and standard of living. Bad companies leave the S&P 500, new good companies come in. Who would have seen Netflix and Amazon 30 years ago? But now they're monsters, and you're investing in those companies, right? Same thing with Facebook. Facebook's went up 5 times in the last 4 or 5 years. Facebook's been doubling your money every year, because people say, well, Facebook, it profits from all of its users. Well, yeah, but you can go and buy Facebook stock, and you can profit along with Facebook on that. So there's and one final reason why I'm expecting a big stock boom is I'm seeing, as you can see, the interest rates are starting to go up. They can't have negative interest rates, and interest rates are starting to go up. The bond market is starting to, have problems. If there is a bubble in finance, it's this 35-year bull run in bonds, because have fallen from 18-20% all the way down to zero. And if interest rates start to go up, the bond prices will begin to fall, and there is about 8 to 10 times more money in bonds than in stocks. And if that value starts to diminish, people holding bonds might panic, sell them, and a lot of that money might go into stocks. Where else are they going to put it?
Sure, that's an interesting point. The overabundance of stocks. The overabundance of bonds, and the alternative many investors would take. I totally understand where you're from.
And all these, metrics, right? Like PE ratios are too high, book values, like all of these metrics that are starting to get out of whack. You know what? It's completely irrelevant because people will chase. I mean, if the stock market starts to go up, people won't care. I mean, we've seen bubbles come and go. Everyone talks about the great crash of 1929, but they don't realize the market went up 400% between 1927 and 1929 before the crash. These metrics can get way out of control, especially in companies that are trying to automate transportation, just remove people from employment, basically building drones. Amazon is going to take over all package delivery. Netflix is going to take over all content, all video. I mean, people are going to think that these companies are going to take over the world. They won't care what the PE ratio looks like.
Interesting. So you're expecting this to end with a bubble?
Yeah, it's definitely going to end with a bubble, but I think we're going to go way higher before this bubble pops. I don't even think the bubble has started yet in the stocks.
Is this because many of the people who now have investment cash are not scared as they were in 2008? Basically, in other words, do you think retail investors are now beginning to adjust themselves to the fact that they want to get into the stock market again after close to a decade?
You know what? That's how it always happens. The retail investor is always late, and he's gonna enjoy it for like 1 year. But stock market returned 25% last year. If it returns 20 to 30% this year again, I mean, people are gonna feel like they're missing out, and they're gonna pile in. Not to mention, imagine if Trump lowers taxes. Imagine if Trump lowers, taxes on dividends, taxes on capital gains. I mean, he knows all about investment. If he lowers capital gains, that's even more incentive for people to pile into the stock market. I know it's going to get out of control, but I think there's plenty of room before it does.
Interesting. Do you see this retail rush also into riskier industries of the stock market, like cutting edge technology, or the marijuana legalization, or the commodities natural resource sector?
I see more into those vice plays, right? Like marijuana. And if marijuana starts to get legalized, they might start looking, okay, what else might be legalized, right? Maybe there'll be other drugs. Maybe there'll be other sectors of the economy. So things like that. But yeah, I see people. What if the government in the U.S., what if they can't police prostitution anymore? Wouldn't there be a similar, people are going to see what happened with marijuana. And let's say if gambling starts to get like more legal as far as like anywhere in America, not just Vegas and Atlantic City and Indian reservations. Government policing everything is starting to become very expensive and very unaffordable. And you got to tie it all together. If the interest rate starts to go up, government expenses start to go up, and it becomes very difficult to police voluntary transactions. If there is a trend to lower the enforcement on voluntary transactions, people are going to want to, invest in those areas, and that's another area for equity investment and the private sector.
Yeah, that's very interesting, Tona. Look, I want to kind of switch gears and dive into the cryptocurrency space, where you're quite the expert, and I want to understand, and I want listeners to understand the scaling problem of Bitcoin. It's experiencing these growth pains between the unlimited and the core. And I want, first of all, to get your analysis on how big of a problem is this for the individual holder of Bitcoin, and is there any sort of action that he should be doing, or he or she should be doing right now? And I'd also like to ask you, do you think that the potential for Bitcoin to gain more and more in price is larger than some of its competitive currencies that are now starting to gain traction and become very viable and very interesting.
Sure, there is a lot there. So let's start with Bitcoin itself and the current scaling situation. So this problem has been around and it's been known for a long time. Bitcoin has a bit of a limit. Bitcoin is, I don't know how familiar your audience is with Bitcoin, but Bitcoin is the new peer-to-peer. It's not that new anymore. Wow, it's already like 8-9 years old. It's a peer-to-peer currency. It's a peer-to-peer value transfer. I shouldn't call it a currency. It's being used as a currency. Basically, it's a way to send a message of value without a middleman. One of the problems that it always had was it can only handle 3 to 4 transactions per second. And for a global payments network, that's not nearly enough. I mean, that limit is starting to affect Bitcoin users today. And there have been many, many proposals and many, many debates on how to resolve the situation. So we had thought that there was one solution on the table called segregated witness that was designed by a group called Bitcoin Core, which is a group of about 100 developers from all over the world, most of whom are volunteering, some of whom are on full-time payrolls by some companies. But another means to do this has come up, and that's called Bitcoin Unlimited. And the way these solutions would get implemented is very, very different. Now, I am a big supporter of one of the solutions and not the other. I don't know if we want to get into that, but I'm a big supporter of segregated witness. And the reason is because I trust the 100 or so decentralized developers that put it together. It is also technologically safer solution because it doesn't mandate the upgrade of software that uses Bitcoin. The other solution doubles the size of a block that puts all these transactions together. But my two big problems with that other solution is that one, I don't trust this new small developer team that put it together, and it's already been shown that that code has bugs in it. And the other reason I don't like that solution is because it mandates the upgrade of the software. And if people don't upgrade the software, they're now incompatible. So it has a chance, and I think a very high chance, of splitting Bitcoin in half, and everyone now has 2 Bitcoins, one on the Bitcoin Core chain and one on the Bitcoin Unlimited chain. And if that happens, I think that would be a complete disaster, not only technologically, but also psychologically, because I don't think Bitcoin would be trusted as this, stable, not necessarily stable in terms of price, it's pretty volatile, but stable in terms of technological development of a new decentralized peer-to-peer currency. I think the confidence in Bitcoin would fall under that situation, and that ties us into alternatives to Bitcoin. I think they are all extremely inferior. And if Bitcoin isn't able to pull it together and not split in 2, I don't think any of those other alternatives have a chance. Right now, they're having a nice little bull run while Bitcoin goes through this debate, and the transactions are getting backed up. It's a little more expensive to send Bitcoin around the world, takes longer to send Bitcoin around the world. So other currencies are capitalizing on this public relations nightmare that Bitcoin is going through, and they're getting a lot of investment, or they're getting a lot of speculative money. But I think they are all in a bubble. I don't think they're technologically superior at all. A phrase that I like to use, another guy in the Bitcoin space always uses it, and I kind of stole it. It's basically the equivalent of it's crowded, nobody goes there, right? Like yes, Bitcoin is a little sluggish and it's a little expensive, but it still dominates. It's like got to be over 95% of all transactions, not including speculative trading, are still going through Bitcoin. It is not being challenged in actual value transfer. If you need to send, value that isn't, that's censorship resistant, you're not going to trust any other coin. You're still going to trust Bitcoin. And you might have to wait a day. You might have to pay $5-10 to do it, but you're going to do it because you trust it. You're not going to risk sending $10,000-$20,000 in something that can fall apart tomorrow. And if Bitcoin can't solve this problem, that also means that nobody can change Bitcoin's code. And stability in the code does count for something. I think Bitcoin will be fine.
Interesting. Tone, look, I'd like to ask you about the blockchain technology as a whole. And you commented to me before the interview started, we were talking about some of the larger high-tech companies in the world that are now enjoying a bull run in their stock price because they've announced that they're investing in blockchain technology. And you basically told me, look, blockchain technology is strictly these cryptocurrencies, and what other people say is blockchain technology is not. Do you can you explain your point of view, and can you explain exactly what blockchain is?
Sure, that's a very good question. If you ever interview any other people from the crypto space, from the Bitcoin space, even if you interview someone on this topic from IBM, please make sure this is one of the first questions you ask them. Ask everyone for their definitions of what a blockchain is. And these days, you will get many, many different definitions. So to me, the word blockchain first appears in Satoshi Nakamoto's code. In basically, when you're typing code, you put like explanations, you put like 2 forward slashes, and then you put your comments in there. And he used the word blockchain. He actually had a space between them to kind of explain what happens during proof of work. So Satoshi's innovation that gave us Bitcoin was creating this proof of work mining structure that allows a message to get sent peer-to-peer that isn't a duplicate. You're actually hitting a send button and you're sending something digitally that you don't have the ability to then recall or take back or delete, and you don't have a copy of it. That's why it's valuable. So he just wanted to name something to describe this process. The word blockchain didn't seem to be very interesting to him. In fact, the original versions of his white paper that explained Bitcoin referred to it as time chain. He just wanted something to describe this process. To him, the innovation was this proof of work that made Bitcoin fairly immutable and fairly censorship resistant. So I apply the word blockchain, meaning a proof of work network that is censorship resistant and basically immutable, or immutable as the amount of electricity being burned to secure it. So when someone talks about a blockchain, I ask them, does it involve censorship resistant, immutable transactions that are also bearer transactions, right? One of the things that Bitcoin has created is it created a digital asset that whoever owns the password to this asset actually owns the asset. Like if you use Gmail, you don't really own your email. Google does, and Google knows your password. So there's nothing you can do to prevent Google from seeing your email or high employees at Google. Bitcoin doesn't work that way. If you forget or lose your password, you will lose all of your Bitcoin. So when someone talks about if let's say IBM or any other company or Microsoft, if they're talking about utilizing a blockchain, the first thing I ask these people are, so are you interested in having your data be completely immutable and have the ability of a user losing it? So if we're talking about deeds on the property deeds on the blockchain, okay, it's great if you want to have the deed owner to have the ability to delete their own ownership of the house or accidentally send this ownership of the house to their neighbor. Same thing applies to healthcare records. You're going to be the only person that has the ability to view them unless you let other people hold your password. And then if that person accidentally sends it in the wrong place, they can either lose your medical history or attribute your medical history to someone else permanently or without you being able to get it back. If these are the kinds of properties you are interested in, then sure, blockchain is something that you want. But it's very, very rare that you want these properties, which is why, to me, if you actually want these properties, then you want a blockchain. Now, Bitcoin isn't the only blockchain, but it's so far proven the only useful blockchain. There are others, they're just not as secure, not as stable, and not as trusted. But it needs this decentralized proof of work backbone behind it in order to be a blockchain. At least that's how I see it. Otherwise, it's just a database with multiple admins. There is no innovation. The innovation is in the proof of work.
Tone, look, this was a very interesting interview, and I'd like for you to tell people where they can find more of your work.
Sure. So my website is called libertylifetrail.com. I am very active on Twitter. You can find me on Twitter as Tone Vays, Tonevays. I also have my own YouTube channel where I have two video blogs. One of them is about economics and trading. I am a trader, so I do a lot of technical analysis, talk about S&P 500, gold, oil, and of course, Bitcoin, occasionally other cryptocurrencies. My other video blog on my YouTube channel is called Crypto Scam, where I try to examine a lot of the projects in the crypto space and in finance and try to show my skepticism and point out possible issues with those projects. You can also find me on a YouTube channel called the World Crypto Network, where I'm also part of two podcasts. One is a Friday evening podcast, a USA Friday evening, where we talk about this week's Bitcoin or crypto news. And the other one is On the Record with Tone Vays, where I do a similar show to yours, where I interview people and try and ask them like difficult questions to challenge their ideas. Because I try to pick people where I understand the subject matter, and then I try to give them something.
This was a very provocative interview with Tone Vays, who's a great trader and with lots and lots of experience on Wall Street on high pressure days. And I've had a chance to speak with him even before the interview. He's a very, very smart guy, and I'd like to cover a few of the topics we discussed today regarding the notion that stocks are cheap. And Tone used the fact that stocks underperformed their historical averages these past 2 decades. He recited the fact that for almost 100 years, stocks have returned, including dividends, about 8% per annum. We're talking S&P type or the Dow Jones, but for the past 20 years, they've only returned about 3 or 4, and that's including this huge bull market that we've seen the last 8 years. That's true, but before you pile into stocks again, consider other historical averages such as P ratios, which are almost 60% higher than norm. Usually the S&P 500 trades for about 15 to 1 a ratio, meaning that if it was a private company, it would take you about 15 years to get your money back. And today it trades for about 25. So it's important to understand that if these were private companies, it would take you 25 years to return your investment. And understand that profits, corporate profits, which power dividends and eventually decide asset prices, are contracting. And at this point, while there are some companies that are still dirt cheap, the index is not. And therefore, if you're looking to increase your allocation into stocks, which is very reasonable to do and very logical to do, because stocks are the best performing assets of all times. Under the Wealth Stocks tab on the Wealth Research Group site, you'll find in-depth exclusive reports that detail and outline a select few companies that outperform the index on a regular basis. They're cheaper, more profitable, and dish out higher dividend yields than the S&P 500. And therefore, they're better than buying the index itself. If you look at them individually, study them and see which fit your investment criteria. It's a great exercise for you to do, and obviously it can be very profitable. We also published and discussed Bitcoin and blockchain on this show. Two fascinating subjects that deserve your full attention. Our exclusive report on it and on two new cryptocurrencies which are now exploding can be found on wealthresearchgroup.com/Bitcoin. Please join us again as we release 3 interviews weekly with the Titans of Industry show. And it's our themes, as you know, are natural resources, the cryptocurrencies, marijuana legalization, and the global economics. So thanks again for taking the time today.